Well, hello, traders and investors. My name is Roger Scott. Today is June 2nd. The summer's here. Where the year went, I have no idea. But as I always say, let's get into it right now. Now, today is Tuesday. And Tuesday, after I get through the global economy, I'll give you the number one sector, the number one stock in that sector. And I'm going to pick out an option for you as well. So I'm going to give you my whole thought process so you'll see me go through the entire process. So let's start with global economy. Global stocks, they rose Tuesday as more economies reopened for business after a long and painful shutdown. This COVID-19 took everything out of the world economy. And just when we thought it was over, social unrest in the U.S. continues to provide a gloomy backdrop. International investors remain focused on prospect of global economic growth. More countries and sectors are reopening, though activity is expected to remain subdued or muted as social distancing rules. And it's going to take us a little while to get back into the swing of things. I'm predicting about 2 to 3 quarters, legitimately 2 to 3 quarters. And that's assuming Trump doesn't push this trade war very, very hard, because things are very delicate right now, and I don't know if it's a great time to be doing it, but he probably knows better than I do. I mean, look, my ex-hedge fund partner is his senior financial advisor, so he's in good hands. Now, despite the bright mood, fears persist about the possible resurgence in the COVID-19 outbreak. There were 34 new confirmed cases in Tokyo. That's not good. Despite concerns and the widespread unrest erupting in U.S. cities, hopes for a quick recovery from the worst global turndown since the 1930s have spurred recent rallies. Markets are doing really well. The protests have rocked America's cities for days so far, not having impact on the financial markets yet. But remember, this is not good for the economy either. But the violence and damage to property may hinder the reopening of the economy, and that's what I'm afraid of. It's been a few days now, and this thing is not going away anytime soon. Crowds gathering to protest injustice and racism could also touch off more outbreaks. Yeah, there's not much social distancing there. This week will provide market watchers more insight on the impact of the COVID-19 as U.S. workers and employers get ready for ADP. That's a private company that issues payroll numbers in anticipation of Thursday's and Friday's unemployment data. So we got the private report coming out on Wednesday, and we got the public, the Fed data coming out Thursday and Friday. Friday, government reports its May labor market. Analysts surveyed by FactSet expect the report will show economy lost 9 million jobs last month. Now, folks, the key right now is for the trend to get better. It's going to be bad, but the key is for the trend to get better. So again, the expectation is 9 million. So if the number's better than 9 million, that's a cause for the market to rally. I want to make sure you understand this. I'm not just reading this for you. I'm trying to make some sense of it, analyze it, and give you some heads up. So again, always look at the expectations and compare the expectations to the actual number. It doesn't matter if the expectations are good or bad. It's the difference between the expectations and the actual number. On Thursday, the European Central Bank is expected to provide more stimulus for the economy of the 19-country Eurozone as more countries fall into deep recession or depression. So possibly if the data from Europe is good, it's going to cause an overnight rally, which will drive the U.S. stock market into the employment report on Friday and give us more upside. Now let's look at sectors. Now, if we look at the top sectors, I'm going to drill this down for you. Top sector remains technology. Now, consumer discretionary second, technology is number one. What do I always say? Consumer discretionary and technology, they're not that far off. And it doesn't seem to be fragmented market because healthcare is on third spot right now. So let's look at our CSI scan. This is our CSI scan. Since the technology is the number one sector, we don't really have to go very far. As a matter of fact, we can just go to the cumulative strength index for the 92 stocks that I'm looking at in the NASDAQ 100. And because most of them, 80% of them are tech, consumer discretionary, and healthcare. So we got Tesla. Tesla looks a little too strong right now. It looks a little like it could be due for a little bounce. Even Musk said that the price is too high right now. So I'm looking for Tesla to cool off. Also, the options are getting a little expensive with the stock price at almost $900. Regeneron Pharmaceuticals, well, that's the company working on the vaccine for the COVID-19. And not only is the stock too expensive, it's in the biotech And right now, technology, not biotech, is leading. As you could see right here, health is in third spot. So we're going to stay with technology. So staying with technology, hey, look at this. JD happens to be a stock that I had highlighted less than 3 weeks ago. What does JD do? It's an e-commerce site, a Chinese e-commerce site similar to Alibaba. The only thing we have in the US is Amazon. China, we have Alibaba. Now, why do I like JD? I like JD for several reasons. One, take a look at the price of this stock. It's just moving. No hovering, no pulling back below the 200-day moving average anytime near this COVID-19. Now, what I really love about this stock is it doesn't just provide an e-commerce platform. It also provides an infrastructure that has an ability for companies to store their products and have them on demand for shipment. So this company is doing things a lot. They're integrating every different department, whereas Amazon is relying on more third parties for delivery. Alibaba's relying on third parties for many things. This company integrates. They do everything themselves. So fundamentally, the company's looking really well. China's reopening. And here's the fun part. Even when, excuse me for the language, when S hit the fan a few months ago in February, I mean, look at this thing. It hit the 200-day moving average and it bounced fast. I mean, fast. And since then, watch out. The stock is looking really good. It's not expensive. It's still only at $54. Let's look at the profile so you can get a better idea of the stock. Look, a 1-year return, 112%. 5-year earnings growth, 143%. Let's look at estimates. Look at that. Earnings surprises. This is what I like to see. Whenever you see these numbers in the green, 261% earnings surprise. Estimate surprise and actual number surprises. That means we are seeing influx of institutional capital move into the stock. The biggest factors they're looking at is 4 positive quarters of really good earnings surprises and earnings estimates. Both are above expectations, which means analysts begin moving into the stock. Well, look at this. 11 strong buy recommendations and 3 holds. That means institutionals are buying this stock. Look at the institutional sponsorship and look at the high price target. $64. The price of the stock now is $54. That's not bad. And this is a short-term analyst target. There's a good chance the stock will hit those levels. Now, remember, we're options traders. Now, if you're not an options trader, it's real simple. I would honestly, I'm telling you this in good faith because there's a good chance we're going to see this. I would wait for one of two things. I would either wait for a breakout above the 56.50 level, or I would wait for a pullback to the 50 level, one or the other. And as far as the options, let's see the options we would buy. The stock is around $55 right now. We want to go to about, let's see here, let's go to monthly. We got 46 days. I'll buy this option. I'll buy the 717 and I'll give it about 2 weeks. And if the stock doesn't move my way, I'm out. Now, in terms of what option to buy, I'll probably be buying the 55 strike price. It's got really good open interest, good liquidity. The spread between the bid and the offer is only 10 cents. Again, if you're buying it on a breakout, you'll probably pay closer to $4.50 for this option. If you're buying it on a pullback, and I think you should wait for a pullback because it looks to me like stocks are coming out, I would wait for the stock to trade closer to $50, $51 and buy the 50 strike price when it's closer to. So if you're waiting for a pullback, go for the 50 strike price. If you're buying a breakout, buy the 55 strike price. If you're buying on a breakout, go ahead and buy the 55 around $4. And if you're buying on a pullback, then you'll probably pay about $4.50, $5 for the 50 strike price. So you want to pay anywhere from $3 to $5. And you want to get either the 50 strike price or the 55 strike price call option that expires on 7/17. It has 48% implied volatility, which is reasonable right now in light of everything that's going on. As you can see here, out of the money, in the money, implied volatility is a little higher, but that's pretty normal for the options right now. There's nothing really weird about this implied volatility level. Again, 50, 55 strike price, 46 day to expiration. Do not hold this option any more than 16 days. When it's 30 days is up, you're done. And if you want a little more time, go for the 821. This is a pretty good option too. Again, 50, 55 strike price. In this case, you don't want to go for the 50 strike price. There's very little open interest and volume. You want to go for the one that's at the money, 55. Look at the volume and open interest, which means the higher the volume and open interest, the more liquidity and the tighter the spread will be between the bid and the offer. So if you want to play it really safe, go for the 821 expiration, and you can hold this for about 25 days. But if you're going to go for the 717 expiration, then you only want to hold this for 2 weeks. So you probably would want to go for the 821 expiration and get the 55 strike price. And again, if we look at the technical charts, there's a good chance we're going to see a mild pullback taking the stock right to the $50 level. And that's probably the best place to buy it right now, because if you look at the S&P 500, it is breaking out, but it's going to stick around probably most likely to the 200-day moving average, which means a lot of back and forth. And if you look at the QQQ, it is stronger. There's a nice strong channel there. It's not backing away. It looks like it's got more upside, which is why I like this JD stock quite a bit. But again, I would wait for a very mild pullback. If you get it anywhere between 54 and 51, get it somewhere in this range. And again, if you're going to be buying options and you're planning on holding for more than 16 days, you want to go for the 821 expiration, for the September expiration. If you're only buying for 2 weeks, and I would do that if you're buying a breakout. I would buy it for 2 weeks if you're buying a breakout above 55. But if you're buying a pullback, which is probably the best and the smartest, most prudent idea, go for the 821 expiration, go for the 55 strike price. You got plenty of open interest and volume. Wait for the option to pull back, for the stock to pull back to the 52-ish level. You'll probably get this at about $4. And you can hold this for a few months. Again, the key here is not to give you the strike price and to give you the stock. The key here is to give you the entire process by which I analyze stocks. So I go with the news, I look at the indexes, I look at the stock fetcher code for the cumulative sectors, I organize them in the right order, I look to see which one is leading, then I look at the other scan, the cumulative strength, to see the stocks that I like best. And look at this, JD came in third spot. And by the way, I've been talking this stock up for days. I've been talking Regeneron, JD, Melly, PayPal, Autodesk has been one of my top stocks. ATVI has been one of my stocks. All of these stocks are in the top 10 right now. And folks, here's what I wanted you to see. All of this analysis that I just did, I did this. Now, I plan on taking advantage of these trades during market hours. But guess what? Market doesn't open for another 50 minutes. Do you see the type of analysis that I'm able to do for the market before the market opens? And that's the key. And folks, I don't know if you knew this, but most important work traders do happens before the opening bell. Just like what I did right now. Just like my demonstration for you right now. I picked out the stock. I picked out the option. I looked at relative strength. I looked at sector strength. I looked at the indices, and I did it all before the opening bell. Why? Because there's too much stuff going around markets during the opening bell. There's just too much activity. This way you focus on and you get into the groove based on what China and Europe did. So you're still trading during market hours, but you make your plans before the market hours. So again, the most important work traders do, which is what I just did in this video to give you an example, happens before the market hours, before the market open. The pre-opening ritual helps traders develop a plan of action for the day to stay ahead of this crazy and unpredictable market. Exactly how I just took you through A to Z, okay? And lately, I've been receiving helpful tips from the world's number one pre-market trader. As a matter of fact, I learned a lot of this analysis method from him. He's the best. And he alerts me on trades based on signals that happen before the opening, just like this JD trade right now. We analyzed it before the opening bell, and then we hit it after the opening bell. You don't want to miss this. You want to get in on it. You don't want to analyze markets when everything's going all over the place. You want to be unemotional. You want to be focused. You want to take into account Asian and Chinese markets and European markets. You want to look at the data before all the noise begins. All right? It's not good to make big decisions during a party. So Get a head start. Learn how to do this just like I showed you right now. Click the link below or the button at the end of this video. Get in on this right now. If you like what I just showed you, you could do this on a daily basis. Quietly, before the market opens, get your everything set up so when the market opens, you know exactly what to do. So there's no guesswork. There's no trying to figure anything out. This will give you an unfair advantage over everybody who's making all these decisions while all these things are moving around and it's just too hectic. Don't do it. Trade like a pro. Click the link below. Follow the button at the end of this video. You got to get in on this now. All right? Hope this helps and check out JD. I'll talk to you guys soon. Take care.